Righty ho, everyone, and welcome aboard. It's lovely to have you in the room today for Trading Buddies on the 19th of February, 2024. Welcome aboard. As always, if you've got any questions, please don't hesitate to put them in the chat box and we will get to them for sure. In the meantime, it's first up the gold chart and see if we can find anything to, oh, we don't really want that. We'll go with there. That's the gold chart on the weekly. Let's go to the hourly and see if there's anything that we can find attractive as far as a breakout's concerned today. Having a little bit of trouble with the control panel, as you probably guessed. A little bit ordinary today. I think they've changed something, as they do. Righto, I think I'm back in where I need to be. Happy days. Righto, so gold today has been a bit of action by the look of it. Let's zoom in a bit and see what that has been. We opened very quietly and then bang, something drove the market straight back down in between the pivots, which is not where we want them to be. And the reason we don't want them to be there is because they tend to get a little bit caught up in that, just like here, where they get a little bit caught up before they break out. So let's isolate the range for the day and see if we can trust a breakout at all. There's the high of the range. And here is the low of the range that we would attempt to break out of. You can see that the risk that we would have to take, bearing in mind for those of you who haven't been here before, that we are trying to trade a breakout long or short. We don't care which way it goes as long as we catch it. So we would go long here with our stop loss here, and we would go short here with our stop loss here, with a few minor adjustments to round it up and round it down to the nearest pip is the way I deal with it, plus the spread up the top. So what we would have to do here is risk this amount, which is $44. My goodness, that's substantial on a Monday morning, to gain into the monthly pivot $3. Anybody in the room, I would suspect that you would say no to that. And even if it gets through there, it's got to contend with the weekly pivot at 6.8 or $6.80 versus 45. It just doesn't sound like a great idea to me.
It's silver.
That's why it's not gold. Thanks, Gary. Oh dear. Let me try that again. Let me go to the hourly chart. Is it any different? It is actually. Thanks, Gary. Much appreciated. It's much different, except it's actually gone in the opposite direction with the big bar going long. Interesting. Don't know what that's all about. Ash might fill us in on that from a fundamentals perspective a little bit later. Let's try again. And the low of the range, don't forget we use the second candle of the day on the hourly chart. Low of the range is there. And the high of the range is the current bar at this point. Okay, that changes things a bit because we have a little bit more space to take for our profit. The risk is still substantial, however, at $9, and the first attempt at getting out would be at $4, and the second attempt at getting out would be at $6. So not absolutely terrible, but not great either. To the upside, we've got DR2 here not far away, and the risk, as we know, was $9. The reward is going to be $4 to DR2. And if we got really brave, we could turn it into probably just a little bit better than 1-to-1. I suspect that we're probably going to hang around here a little bit. We've got no US session today because of the bank holiday. We've got two pivots beckoning price down towards that area, and we've got a former resistance area here, which indeed is the breakout area for the current rally. So I suspect that this is going to be retested at some stage. Whether price can get through there or not's another story. I'm not prepared to take that risk. So I would say it's a no for me for the breakout today. If it goes long, then, well, I'm clearly going to be wrong, I would think, because that will continue. One would suspect maybe even as much as that again, which is about $15, I would imagine. If I can measure that. Yep, about $15. And you've got a little bit more than that up to the monthly pivot. So if you fancy the long, then probably that's the way to go. But bear in mind, you've got these two pivots here going, come here. I want to talk to you. Righto, so I'm going to leave gold alone. Let's have a look at very, very quickly the last week and how that would have performed. Your high of the range would have been here. Your low of the range would have been 9 o'clock bar. Sorry, the high of the range. That's the low of the range. The high of the range would have been at the 9 o'clock bar. That's the 12 o'clock. So that's the 9 o'clock. So there's the high right there. There's the low right there. And you would have been taken into the long and you would have got hammered. So Friday would have been a bad one. Tuesday's pretty clear. It would have been a good one. Oh, sorry, Thursday is pretty clear. Would have been a good one. Would have struggled through here, I would imagine. Let me see. Yeah, that would have been the high. I know you would have won. That would have been the high of the range. No, maybe not. That would have been the low of the range. You would have been taken in short. And you might have survived that one. You may well have got out of it with a DS1. Tuesday, Friday, Thursday, Wednesday, Tuesday, that'd be the low of the range. I think you're in trouble here for this one. That would be, oh no, you might have got out of it. That would be the high of the range. You would have got a DR1 for sure out of that one. So that would have been a winner. And Monday, which of course we didn't trade, high of the range is at 9 o'clock. No, that's 10 o'clock. So high of the range is about there. Low of the range is there. You would have been taken into the long. You couldn't trade that, right, because of the pivots. And you would have lost had you done so. All right. So a couple of winners and one loser. 2 no trades, I think. Sounds about right. Okay, let's leave gold alone and go to an update on trades that I am currently in. Kiwi Swiss is the only trade that I'm in at the moment, having had 2 or 3 non-entries last week, nothing triggered. And so Kiwi Swissy is the only one that we're still in. There looks to be now an attempted breakout of this range, and it's now that we need to pay attention. If today's bar were to close above these highs in particular, and then we got a pullback, I would suspect that's a very, very nice place to scale into this trade. After all, we are free trading this. So there's no risk on the table. We could add to this position, no problem. If, however, we saw price come back underneath this area and then retest it, I would suspect that we're going back into the range and we're going to probably struggle with our trailing stop. I may tomorrow look to move my stop loss and take some more profit on this, put it underneath Friday's candle. I may do that. I want to see what today does first, though. So that would probably be my most logical move. Move my trailing stop up underneath Friday's candle. And if this is indeed a breakout, then happy days. We won't need to worry about the stop loss. If it's not, and price comes back underneath this area, as I said, I think we're probably going to go back and fill the bottom of that range anyway. So that would be my decision on Kiwi versus the Swissy. As far as this week's concerned, there were a few game changer bars. Let me take a look at them. Aussie dollar was the first. We go to the weekly chart and see that we've got a buying bar here. It's difficult for me to say the dollar's going to be weak, but then I have a look at the dollar index and I see it's come off the top of our ascending channel and may well indeed look for the bottom of that channel again. especially at that area there, which was the first breakout point that retested. So another test here at the confluence area may be the spot that I would look to trade the dollar long again, or in flip that upside down, trade everything against the dollar. But at the moment, I am seeing dollar weakness. So maybe we have a little, I don't know, intraday crack at trading something against the dollar long. It could well be Aussie versus the dollar. And as I say on the weekly chart, that looks to be the case. We've got room up to the monthly pivot. So certainly not the worst. Double bottom, higher low, high, 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 low. Why not? Doesn't look too bad if you believe that the dollar is going to go to that support level. I haven't traded this, and I can't really give you a classic. At least I can. It doesn't agree with the major or the big boss. The big boss is not telling us to go long here. The big boss is saying that we are still in a massive downtrend, or certainly downward chart pattern. The hint of the double bottom and the higher low is there. I grant that. And we have had a break and retest of that trade line there. So there may be upside, but I think it's limited, frankly. I really think it's limited up to this level. And that coincides, of course, with the dollar having a little bit of a spell, but then coming back into prominence. So it's kind of there short term. For, well, when I say short term, we're on a weekly chart. So there's a few pips available to you. It's about a little bit less than 1-to-1 trade if you wanted to take it. Entering here, and you see that red line there? That's the one that convinced me not to take this trade, because we're trading straight into that former support level. But if you fancied that Aussie can go through there, you've got 85 pips available off 110 pip risk. Not quite what I want on a weekly. I want something a little bit more than that. Euro Aussie, as you might expect, with the strength coming back into the Aussie in the last few days, we've got some downside here and a reversal bar, a key reversal bar, or what I call a game changer bar. Euro Aussie, same applies here. The reward available to a strong support level is not good, and I'm looking for far more than, a little bit less than 1-to-1. You can see the former support here, the former resistance here. The monthly pivot's there. It doesn't make any sense to me at all to take that trade. So we'll move on to euro versus the pound. Same applies. These are so similar this week, where we're seeing reasonably good scenarios that are hampered by strong resistance or support. This again is in that exact same basket. Like the fact that it's coming off this base, but I'd like to see it break the monthly pivot, come back and give me a higher low on the monthly pivot. Would be good, even a little bit below that, before I took that long. That's euro pound. Euro versus the dollar, similar to Aussie versus the dollar, almost the same chart, and same applies. I think you'd probably get a long into that level, into the monthly pivot, but thereafter I'm not sure what happens. And with those that I'm suggesting have got issues with resistance ahead of them, no problem at all if you drop down a few time frames and find a way to trade that up to there. No problem at all, because you've got plenty of space on a smaller time frame to have a smaller stop loss and a bigger win ratio. So don't have a problem with that, but I don't have a setup at the moment, having said that, on any of them. Pound versus the Aussie is next on the weekly. Exactly the same applies. There's no change to any of these. Looks to want to come, or is retesting that breakout area that really wasn't convincing, you'd have to say, pound versus the Aussie. And at this point in time, you'd have to be thinking, that looks like it wants to come down and test the monthly pivot, but does it want to go further? I have no idea. But that's what would stop me in trading it. That's pound versus the Aussie. Pound versus the CAD. This one's a little bit different, but I have a rule that says I won't trade a high test bar that follows a low test bar, and that's exactly what we've got here. We do have a double top. We do have a potential for this to be a lower high, and we've got a little trade line coming up through there as well, I suppose. Until that actually pulls back off there, I wouldn't be interested in trading it either. Same applies. If on a smaller time frame you find a reason to take that trade, then happy days. I think the directional bias is probably right, but I don't see a trade there at the moment. Having said that, I do see weakness in the CAD this week again, which makes this one particularly interesting. Kiwi versus the CAD. Now, Kiwi versus, did I place an order on this morning? No, I didn't. Not sure why. I was going to. Kiwi versus the CAD. I think Kiwi is probably the strongest currency on the board at the moment, if not one of them, certainly. And it's got a long way to make up because it was having a shocker, the Kiwi, but now it's coming back into favour. And I see no reason why this can't go on. This is not a game changer bar per se, but it is what I call a game changer plus bar, which means we had a game changer bar the previous week and then an inside bar, which in and of itself is a candle that's telling you, I don't want to be down here. I want to have a look at what's up here. And that's probably here. Same applies, poor reward to risk. But if it breaks here, as it looks like it's going to do, or is doing, and then pulls back, then you've got a reason to suspect that you can trade that. It's just a little bit safer than it is at the moment. But I favour this one. I think that's probably the best of them, Kiwi versus the CAD. Kiwi versus the dollar is the final one. As I said, Kiwi does look strong at the moment. I don't believe that I want to trade straight into an untested monthly pivot. It's the same here. It's a game changer bar plus. I don't want to trade into that without taking profit. And if it does bounce off there, or even break it and give me a retest on a daily time frame or even the 4-hour time frame, that probably makes sense then to jump in and trade it. Of the game changer bars, I think Kiwi CAD is the best, but it does have its issues, and I do want to see a little bit more price action before I jump in and trade it. The other two on my watch list, which are not game changer bars, Euro CAD was one this morning, and I think I've missed the boat on this one already. Euro Kiwi, did I say Euro CAD? I meant Euro Kiwi. Oh no, we haven't missed the boat on it. The weekly is suggesting that we're at a very, very strong support level, and that's pretty clear across here where it's been resistance, support, 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 a whole lot of consolidation there and rejecting that level. Now we're back at it. Looks like we've broken it and even retested it. Got a reversal bar off the monthly pivot, the daily pivot, and the weekly pivot. There's only one reason that I haven't taken this trade at the moment, and I'm just waiting for a, I don't know, something better on the daily, as I am on most of these. It's the support level. You know, we're trading bang on it, right at it, and then we're trading straight into the first support underneath it, which has also got form through here as well. That's why I don't want to take it. But I think you could be excused for putting your entry here and putting your stop loss above the swing. That would make sense to me. Not putting your entry here and your stop loss here, trading the candle. I don't believe that's a good idea. So that's what my thought process is on Euro versus the Kiwi. If you can find it on a smaller time frame, once again on the daily perhaps, where you find that there's a false break of maybe that trade line, so price back up, you have another look at the monthly pivot, then fail again, come back underneath and retest it. In particular, if you can get some profit in the bank before here, I think that would be a good idea. So Euro Kiwi definitely on the watch list, as is Swissy versus the yen. Now, Swissy versus the yen is my final contribution for this morning. Afternoon for some, evening for others. Reason I like this is because we are absolutely sandwiched in a triangular pattern, and that looks very much to me like it's going to tell me eventually what it wants to do. And what I mean by that is it'll either break out of here and retest it, giving me a buy, which I don't like at these levels, or give me a false break of here, giving me a sell, which I don't mind as long as I can get some money in the bank. Not worried about the monthly pivot so much at this point because it's been broken and retested. And on the weekly chart, it looks all over the place, but that support levels there is interesting. So don't know the direction, frankly, that this is going to go at the moment, but I'm ready, willing, and able to trade it short. Break of this level that's the key level, that dotted yellow red line, as I see it. If we can break through here, get the false break or the break and retest of that area, as long as I can get some money in the bank before that level, I think that's the way I want to go on Swissy versus the yen. There are a few clear directions that I've pointed out that I'm following. I think Kiwi CAD's the best of the game changers. I think Euro Kiwi is probably next best on the list, but you need to wait for that that break and retest or false break. And Swissy yen ditto. Got to trust the yen. Do we trust the yen yet, Ash? How you doing, mate?
Oh yeah, not too bad, mate.
Pull your mic down, mate.
Oh, sorry. Yeah,
Hey.
I mean, I agree with you on the yen. It's just we can't. I think there's a possibility that the mood music is changing from Japan, and it makes the yen really, really difficult. And I think timing the yen is obviously the hardest thing to do. You know, trying to time sort of any kind of buy signal with the any buy move with yen is really, really difficult. And you know, I would look at the Swiss yen, which I did last week actually, as it was sort of near that that resistance zone. With sort of like a few whispers from the BOJ that you know they may well be sort of you know changing policy, and I think the Swissy is one of the weaker ones, and particularly because I think the environment has changed, and we are now starting to see kind of inflation drift out the market. And what we have seen, surprisingly to me, is inflation kind of coming in. Central banks kind of raise policy, and the Swissy actually outperform. So I think that there's probably a case to be made against the Swissy still. You know, I've still got a CAD Swiss long, which I'm going to remain in. And I still think there's some weakness to come for the Swissy. Does it come against the yen? I like it. My problem with the yen, of course, is the cost of holding it. You know, so it's really difficult because I think timing it is almost impossible. But to get into a position and hold on to it and see if it can, you know, ferment on its own would be fine. But it just costs too much. The one thing about the Swiss, of course, is that their interest rates aren't as high as everybody else's. So the cost of carry for the Swiss yen is less than everything else. Yeah. So if you are going to go long the yen, the Swissy appears to me like the obvious position to hold. But
can I just throw a spanner in the works there? And you may or may not have heard of this because you're probably sleeping at the time that I heard it. But maybe it happened over the night or over the weekend. There's a story going around the place here that Putin has, or not necessarily Putin, but one of his underlings has made the statement, and I don't know what it was pertaining to, but he was talking Armageddon. And I don't know if there's any substance to that or whether it's a whole lot of palaver. Have you heard anything?
Oh, I mean, I've heard Armageddon for the last year and a half, mate. I don't really pay too much.
This is over the weekend type Armageddon.
Yeah. It's difficult. Do you know what? Putin's just done an interview with Tucker Carlson, and it kind of drew back the curtain a little bit, I think, against the West, and it kind of gave a different side to the argument. And I wouldn't be surprised at all to see the media from the West go on the major offensive to try and sort of instill some new fear. And
okay, so this is table tennis.
I don't know, mate. I mean, if you know, it's all so difficult to kind of keep abreast of and know what to believe. I end up not bothering with any of it because it's you know as I said before, you know I'm not a Putin supporter by any stretch, but I'm not really a United States and an allies policy supporter either. I just don't. I think they're all as bad as each other in the end. They're all doing stuff, you know. Whether we sort of Putin's done the kind of unthinkable. Because his actions are he's laid it bare, you know, it's really open and what's happened there. But the United States have been doing stuff for, you know, surreptitiously for decades, and I can't keep up with it, and I just don't bother because at the end of the day, really, I mean, I get what you're saying, you know, when it comes down to a trading opportunity, then you think that might push the yen to the forefront again.
Yeah, I don't know that I'd want to trade against the Swissy because it'll do similar,
yeah,
if not more.
yeah, but it's one of those
But
things that if something like that was to happen, I don't think we'll be looking at our charts for a little while.
no, true
Um,
story.
so yeah, I don't bother with it anymore, mate. It's just what
Mate,
goes on in
if
the
you
upper
can't be bothered
echelons.
with it, then guess what? I
Yeah,
haven't got any chance.
yeah.
So I'll listen to you.
Yeah. Yeah, I mean, I look at the data, and that's what I've been doing this week is just looking at the economic data and what's happening sort of, day to day. That to me isn't a macro story that I can really kind of gravitate towards and give any credence to. But the
Sure.
data is suggesting that it's going to be a tricky week. I mean, if we kind of consider firstly the euro, and the euro is probably the big one this week. It's probably the big currency because of the interest rate. Sorry, the inflation data that we've got coming out this week. And I think you made a really good point about the euro. You look at it against the Aussie, and it is arguably still on resistance. Sorry, still on support. I know that's through today so far. But if we go on last Friday's bar, because today, we might well see this close back above the weekly pivot, so we'll have to watch it. But that's arguably on support against the euro, against the Aussie, against the CAD. It actually looks to me like it's possibly carving out a bottom down here. It's a bit scruffy, but it's possibly carving out a bottom. The pound is it's just too messy really to kind of get any feeling for. The dollar's the one that I find the most interesting because again, this could be part of carving out a low down here. It looks like we've got this channel with the euro, and that could push to the upside. It could push to the downside from this particular point. It's right in the middle. You look at that on the weekly, and we've got this inverted head and shoulders type of thing
Yeah.
going on. You know, I'm not saying it's a particularly strong one in many respects, but there is this on the weekly where you got the left shoulder there, the head there, right shoulder, decent looking bar last week. It's a pin bar, but it's more bullish than anything else. So there are maybe signals that we could see some buying here for sure. But it's just that it's not clear enough. It's not a really strong buying bar, and we are on support down here again. You look at that on the weekly, you look at that on the daily, same thing. Decent horizontal level across here. Again, it depends where you draw it, but it looks like a zone, a horizontal zone down in this particular area. So that would suggest that the euro could also bounce at this point. And listening to what you're saying about the dollar and the dollar index, this would be a decent shout. COT
Yep.
data didn't move last week. Buyers and sellers were just not really sure what to do with the euro when it came down to last week's, which is probably intimated quite nicely with the weekly bar in many respects. But there was no adding and no adding to longs, no adding to shorts, in any significant volume. Seasonals suggest that we're about to kind of carve out a low, and maybe have a little bit of a boost into March. So not a great time to trade the euro either long or short because carving out a low suggests some range. But we've got the CPI data, and the CPI data potentially, and it's not a definite ever, but it's potentially a market mover. If CPI data comes in really over 2.5%, I would suggest, even though we're at 2.8 right now, I think anything over 2.5% suggests still some stickiness because even though it's a reduction from the 2.8, the lowest print we've had is 2.4. So it's in a bit of a range where it's sort of bashing its head and maybe jumping off the floor again. So I wouldn't feel comfortable until we get to 2.3 to say, okay, the euro is a definite sell. 2.3 and below, maybe 2.4 actually. So it equals its lowest point. 2.4 and below, the euro is a sell. Anything above 2.8, 2.7, 2.8 is probably a buy. And everything in between is probably range. So I don't really want to trade it until Thursday. And I think intraday, you're probably okay selling the rallies and buying the selling the rips and buying the dips. I think that's probably okay. intraday, but it does kind of leave the week, you know, relatively difficult. And also we've got a public holiday from Canada as well today, so you know that's going to kind of put things on hold a little bit. It's made the markets a little bit quiet. China's
Just as an
PBOC.
aside on that, there is an untested daily pivot currently on the euro versus the dollar, and we do have a double top in place at the moment on the 30-minute chart. In fact, you could call it a quadruple top on the 30-minute chart, and we do have a nice little support trade line, and looking at an opportunity from that on the 30-minute time frame to trade it back to the daily pivot.
Yeah, which makes sense today to me. That you know, that as an actual trade looks pretty good. I think, you know, looking for longer term positions, like, you know, what's going to happen this week, difficult, really, really difficult. But this is a huge selling bar here, and we're basically within this range, you know, of this selling bar right now, and nearer the top end of the selling bar than the low. So, you know, even if you were to sort of like, what's that down there? That's 20. Stops at the highs there. I mean, you could get a 1-to-1 with a pretty safe looking stop up there, and a 1-to-1 drifting down to the daily pivot. So there is, I think there is probably a trade down there that would sort of potentially carve out a right shoulder down here as well. A strange one actually, might not be that attractive in the end. Might not be that pattern. It might be something else. But that would add to the narrative that the daily pivot is probably the magnet for the day. But yeah, I quite like that as it goes. Maybe I might have a little look at that.
Even got those of you who like the candle pattern ring high, there's one sitting there on the 30-minute chart at the moment as well.
Yeah, there is actually, isn't there? That is pretty good. That does look pretty good, I have to say, mate. This bar it makes it even more interesting in my opinion.
Yeah, it didn't take long for them to erase that news announcement, did it? 3
No, it
days
didn't.
and it's done, or 2 days and it's done, really.
Yeah, no, it didn't. Now that might well have been. Let me just see what that would have been.
Can't quite remember what it was. It was CPI from the States.
CPI from the States. So CPI from the States came in hotter than expected, and yeah, 13th. Yes, it was. You're absolutely right. Yeah, CPI just from the States came in at 3.9. So that was a core number. 3.1, still a drift to the downside, but you know, what still well over that point. I quite like that. I mean, that's you're right. It hasn't taken long to drift back, but I think that the fact that we haven't got CPI from the Euro zone until Thursday suggests that it's going to struggle to get through any resistance point, and this is the most obvious resistance point, being the high, where that CPI data was released. Now, if we look at that on the, but then you got that there. That looks good. That actually looks really good there in that particular area there, mate. Now I'm going to take this one on. I like that. I think it's a worthwhile position to take. So let me just see what I've got here. Where's my?
Okay. Hasn't set up for me yet, but hopefully it will.
Where's the Euro? I can't even see it on here. There we go. Yeah, I mean, it doesn't need much, does it? I might get stops well and truly out of the way. Problem is I can never calculate. I'll tell you what, I'll come back to you because I can never calculate I don't use Trade Manager, so I've got to calculate my entry and stop loss by hand.
Stay there. I'll give you a couple of minutes and I'll go through
all right,
go
good
through
stuff.
a couple of other things. Too easy. All right, so I am going to have a look at the silver and the gold charts again because I can't.
Oh yeah,
I can't
like
work out
too.
why one's going in opposite directions to the other at the moment. Let me see if there's a technical reason for that, and then I'll come back and ask Ash if there's a fundamental.
My system's just frozen, mate. So I might be back in a minute.
All right, mate. No
well, we'll be back in a minute if it freezes.
Cool. So when I look at gold on the daily chart, Here's what I see. I see it's come off support again. But did it reach support? That's the question that I have in my mind. So I have to go a bit wider. And there's your answer. Yes, it has. So it's come off support and now threatening, if you like, to retest that trade line. So upside looks pretty strong. I think we spoke about this candle. Was it last Monday? No, we didn't. We might have done that in my Telegram group. I can't quite remember. It looks familiar anyway. And as it turns out, it was a very, very nice game changer bar and has turned the market very, very much in favor of the bulls, but up to a point. And that point is, see where I've got this next horizontal level. It's been through this one, or is going through this one today at the moment, but it's reached another one. That's why I think there's probably downside with gold on a small time frame today. And again, similar to what we just pointed out on the euro, different circumstances entirely, but I see an untested daily pivot. I see the potential for this to come back underneath here. I just don't know if it's got the wherewithal to get back to these pivots, because that's a pretty strong level there as well. I think gold's in a range today. I really do. And I don't think I want to trade it. But let's have a look at silver. Silver is at a resistance level, clear resistance level in my book. Resistance here, support through here, resistance here. That's just the daily. If I go back and have a look at the weekly, you can see it's got form there as well as support through here, rejected there, there as resistance, there as support. So this level's quite interesting as well. What today brings, however, is a break and potential retest of the monthly pivot. If that looks like that tomorrow, then I think this is a confirmed breakout of this region. I don't know that I want to enter here because of that level I pointed out, but maybe above Friday's bar would make sense to me and just trade that bar if this looks like that. I think that's a reasonable position to take tomorrow. But right now, I want to know why gold has rallied and silver has sold off. Interesting. Any thoughts, Ash? I can't hear you, mate.
Sorry, there we go. It's because I kicked out. Short on the euro. I just kicked out, mate. So I'm short on the euro, just near enough at price, and then I'm targeting that daily pivot to take profit. I'm not gonna sort of hold on to the position because of Thursday. So just taking a daily trade on that, intraday trade on that. Gold and silver, yeah, interesting. Well, I think where silver is all of a sudden sort of become interesting, and with gold and silver actually, I think the fact that they both held pretty firm. Obviously, that CPI data spooked anything against the dollar, so we did see a sell-off in assets. But where I think silver's really won the battle is its production usefulness. You know, in industrial production, where gold is really purely a hedge play against inflation, and a way to kind of protect capital. I think with I think because silver has kind of got that dual purpose, it makes it just a bit more attractive. As
massive game changer bar there on Friday.
Yes,
for the week, massive.
Yes, I totally agree, and I really like silver, and if there was a way to trade the futures, that I would definitely be going long on silver. Without the futures, it makes it more difficult because of the cost of holding it for a few days. So that's the only reason I'm not going long silver. But I like it. I do actually really like it. I think as a long trade, I think it's decent. If you were to get in here with stops at the lows, and aim for that the upper trend line up there, then that's around about a 1-to-1. Yeah, it's about a 1-to-1. So I think if doing that would mean you've got to be relatively comfortable that you're going to get to that point. And then after that, of course, it's going to depend on what happens to the dollar. But there is enough, I think, now to, the problem that the market's got is timing. When Jerome Powell and the Fed are going to lower interest rates, and I think that they were probably looking for too many cuts this year, because they were hoping for a cut next month. That has probably disappeared now. With CPI data the way it was, with unemployment data still pretty solid, there's not really too much suggestion that we should be trading the dollar short at this stage. But because everybody's trying to anticipate, they're trying to get in front of it. They don't want to sort of trade it when there is an indication that Jerome Powell is imminently going to say we're going to be reducing interest rates. They're trying to get in front of it. So I wonder whether the dollar's still got another month of fluctuating between some levels. But it's going to be data dependent. That if the data comes out and it's weaker, and it sort of actually shows us that the United States is weakening, then of course we're going to see the dollar weaken, and we're going to see just about every other asset do pretty well out of it, particularly gold. Gold's had a half decent bounce where it is, but I wonder whether if the data remains a little bit sticky for at least a couple of weeks, whether there's going to be too much confidence in anything against the dollar. But it is if rather than when. They lower interest rates. We're now at that point that it doesn't appear, unless there's obviously some external factor that we can't yet foresee. If an external factor comes into play, then of course the dollar could start to strengthen out of sight again, because inflation will kick in. But it appears that they've probably won the battle. They haven't won the battle yet, otherwise we'd see the dollar weaker, but they are winning the battle. From the double-digit figures that we saw in 22 to where we are now, it's worlds apart. So we know that there's not too much to go. There's probably not too much to go when it comes down to what policy needs to do. But it's just picking the timing. And I guess when it comes down to gold and silver, they're a lot more pure, because they don't have their own central bank kind of affecting the value of those products in the same way that others do. Because when the United States reduced, what's that, mate?
Nor does uranium.
Nor does uranium, and uranium's kind of managed to kind of hit $100 a pound and hold. It's kind of it's held the line, so it's done pretty well, really, off the back of the Cameco release last month. So I think if uranium was on these charts, then we'd be having a field day. We'd be in a much better place, really, because it's a lot clearer what's going on with that market.
Absolutely a lot clearer, yeah.
When it comes down to what goes on with gold, it's data dependent on what happens with the United States, and the United States is still stable. It's still relatively robust. We need to see some further weakness. We haven't seen what I think everybody was expecting, which was inflation being driven down by weakness in the jobs market. Just hasn't happened. So it's got to be, it's got to come from somewhere else. And again, those kind of positions haven't happened either. But look at that on the monthly, mate. Looks like an inverted head and shoulders kind of forming there as well.
It does. It's a break and retest of the monthly trend line and trade line. We've come off the bottom of that range, which Gary's pointed out. And look how long it takes for silver to break out of a range.
Yeah.
It can take forever. And, we're going back to 2014 in 21 or 2020, sorry. It broke out of that range and now formed a new one just above where it broke out from. So, I can see upside here myself.
Yeah, looks pretty good, doesn't it? It does look pretty good. So silver I like. Gold, I think is going to be fine, but I just wonder whether it's going to take some time. But you see, this one's interesting because we're still seeing some growth, and of course there'll be more growth potentially when they lower interest rates. So the fact that they're buying silver in this particular environment and holding the line with silver in this particular environment, I think suggests that it is the one to buy. And obviously the value and the room. If you look at that monthly chart on an even sort of a little bit further out, so reducing, yeah. Look at the room it's got to get to before it gets to those highs in 2009. If you compare that with the gold chart, hasn't got anywhere near the same room. I mean, you're talking about this doubling in price before it gets to those 2009 highs. So I like silver. I think it's a really good play. And as I say, if it didn't cost to hold it, I'd get in. And the reason the costs bother me is that you've then got to have your timing right on the money, or close to. You know, if you're eating away at your profits just because they're charging you quite a lot in swaps, it's difficult. It's a difficult one.
That's the measured move on this range. That's
Mm.
the measured move on the entire breakout.
It's got some room, isn't it? It's got some room, mate. I mean, that does get us back to double, basically, doubling your cash.
Yeah, 100%.
So
Exactly, 100%.
yeah, this was actually my favorite of all the longer term positions. This is my favorite chart, really. I like silver. I think if we're going to see a move on anything, that's got some legs, it's the dollar versus silver.
Was there any good any good seasonal at all this week?
No, there wasn't actually. I mean, there's some short-term moves. The pound is, one of the weaker currencies. The CAD doesn't particularly do particularly well. I think what's notable about the seasonals is the lack of seasonals. There's
Right.
just there's a lack of an expansive move, which makes a lot of sense in a lot of ways. We're sort of closing out the second month of the quarter. So it's neither here nor there. You think about the start of January, that's fresh year, let's get going. You think about the end of March, end of the quarter, let's get going. So even sort of as we sort of like go into the second week in March, that's when things are going to start getting more exciting. Even maybe even the first week. But this is one of those months, where not a whole bunch happens. There's a bit of positioning kind of going on, no doubt. But closing out February, I just don't think it's an exciting and decent time to take trades. Which is why maybe the intraday traders are going to have a bit better time of it. As we kind of hit ranges.
Hang on to if we hodl our Swissy positions, that's probably the best thing we can do. Apart from, as you say, intraday trading, I think is probably into its right zone at the moment, given exactly what you've just said. There's very little driving the market beyond resistance and support levels. So I get that. That makes perfect sense to me. But it also makes sense to hang on to what we've got in the market at the moment too.
I would agree with that. And I'll tell you one of the reasons I'd agree with sort of like holding on to the Swissy position more than anything else is because it might make the year very, very simple. Where you've got that position in the market, and I think there's a decent chance that we've hit the lower base with the Swissy, and it's kind of, or the upper base, I guess, with the Swissy, and it's ready to turn around. So you could keep that position for most of the year if that was your appetite, and feel pretty comfortable because you don't have to feel like you need to get into the market to make money because there's already sort of like something being generated. So I think holding on to that Swissy as a long-term position is potentially going to be a very, very sensible play. As I said, that there is a potential, the possible dynamic has shifted in the market, and there's a possible shift in sentiment globally about what's going to happen to the value of currencies. And we haven't seen the SNB quite as active in the currency market as they were prior to December. So there's a few sort of like little hints going on that the SNB are maybe not. They don't need to protect the currency quite as much because the reason that they have to protect the currency is that if everybody else gets inflation and hikes interest rates, making their currency too valuable versus the Swissy, imports become really, really expensive, and that pushes inflation up in their country. So they have to kind of, get into some interplay. Now things are changing. The dollar starts to kind of, the Fed start to flip position, the ECB flip position, potentially the pound flip position, the BOC, all of them start to flip position. The necessity to keep a strong Swiss is then negated. So so that's one of the reasons that I think that we could see the SNB maybe even less active in the foreign exchange market and just allow the Swissy to devalue a little bit.
Okay, before we go to your questions, if any, and your sharing of anything, if any, is there a good one for the week from you?
Silver would be the one,
Silver?
mate. But yeah,
okay.
Is it a good one? I give it sort of better than average.
Better than average? That's better than nothing.
Yeah.
Right. Okay, mine's still Euro Kiwi. And I think from a relative strength point of view, Kiwi, I think, is the best. I just got this thing with the Kiwi at the moment. And the dollar, I suppose, runs second. But we've got to bear in mind that we do have those figures coming out later in the week. I think on the sell side of things, the CAD, the yen still, and probably sneaking the euro in there as well, but not against the dollar. I think we've got to just weigh up against the dollar and wait and see what that's going to do. But as I said, from my technical analysis, the dollar's probably got a little bit of weakness. Whether that's caused by the announcement this week or not, I don't know. But as soon as it hits that support level, I think I'm a buyer again of the dollar and seller of things like the euro dollar in particular. We shall see. Questions in the box? Absolutely nil.
Everybody's happy.
And we don't have George in the room, so guess what? You and I are going to have it early, Mark.
Oh, can't grumble at that.
There you go. Breakfast time for you.
Yeah. Yeah, it is breakfast time for me. I don't tend to eat breakfast. Not really not that I'm not a fan. In fact, I'm not really a fan. I think it's because I'm bored of cornflakes and and I can't be bothered to do a fry up.
Well, there's a good reason.
Yeah.
Actually, I'm not doing breakfast at the moment either because I'm doing this what do they call intermittent fasting.
Oh yeah.
Trying to shed a few pounds to compensate for what I put on in Bali.
Yeah. What's intermittent? How intermittent does that have to be? Every sort of 4 hours or something?
No,
6
it's
hours?
Monday to Friday. So
Yep.
last meal and wine is around about 8, 9 o'clock at night.
Yeah.
Next meal is around about 1, 2 o'clock in the afternoon.
Oh, okay. Okay. Yeah, actually, a friend of mine did that for a while. Thinking that now you said it out loud, and he did actually lose a lot of weight very, very quickly. He was exercising as well, though. Don't know if that makes a big
That
difference.
helps. Well,
Yeah.
I carry bamboo pots around the place and all that sort of stuff.
It's close enough.
The wine tends to counteract it just a little bit.
Yeah.
But that's all good.
Yeah.
All right, mate. Have a great week.
You too, buddy.
We won't catch up before next week, I don't think. But if we do, happy days. Everyone else, have a wonderful week ahead, and we'll look forward to your company next Monday when we will give you our ideas of what the week ahead may bring. Have a great week, and bye-bye for now. See ya. See you, mate.
See you soon, buddy. See you, guys.